Good morning, everyone. It is December 19th, Monday morning around 7:30 a.m. Eastern Time. Just going to quickly recap what's going on in the charts from last week and last night in pre-market trading today and kind of what to expect this week. I am battling this cold, so I'm going to try and get through the charts really quickly this morning. Not a whole lot has changed, so I'm just going to fly through everything pretty quick. More or less, we've got the US dollar index 60-minute chart. We've had a nice run up last week. We broke through the 80-point resistance level. We got that pullback as expected. Usually when you get a breakout, you get a test of that breakout. And we hit that bottom on Friday. Through overnight trading last night and this morning, we saw the US dollar actually have a nice move up, which actually pushed equities quite a bit lower. Pushed the S&P back down to Thursday, I guess it was Friday's pre-market lows, down around the 1200 mark on the SP 500. Since then, we've seen the US dollar pull back, and that has put a bounce off the S&P, an 18-point bounce back up. And it's also helped commodities a little bit with this pullback in the dollar. Overall, the US dollar index is still holding up very strong, and the weekly chart, if we just pull it up real quick, just let it load. The weekly chart still got some resistance to get through. We've got this congestion back here, which it has to work its way through. But overall, it looks as though the U.S. dollar, if it can hold up in this pattern, which it's holding so far, then we could see it continue to go higher, have another pause, and then it could go in ballistic and kind of shoot right up into the top of this trading range again around the 88 level. So if that happens, we're going to see a pretty massive sell-off in January, February. But that's a pretty big move, and we're not looking that far ahead, but we are in position for the markets to actually continue to fall. That being said, we are coming into holiday season, and if we just pull up the calendar, you look at the calendar, more or less from the 5th, we've seen the market fall for the full week. Last week, we saw the stock market fall even more. Here we come in Monday. We have got holiday season right here. Usually, you'll see lighter volume going the week before Christmas, which usually means sideways to an upward bias in the market. And of course, we've had 2 weeks of a down market. We are getting a little bit oversold, and we are at a key hold number on the SP 500. We've tested the 1200 level twice, and it's bounced very strongly. So today could be do or die for the S&P. We do have our stops in place in the money, so when we get taken out, we'll be locking in gains and moving to cash. So I would expect this week to probably be some pretty choppy price action in the market, unpredictable, light volume. The big money should be on the sidelines and more or less finished all their big movements for the month. That being said, the last week of December will most likely be pretty much the same as this week. It'll probably be a sideways chop, could fade higher, could fade a little bit lower. It's just going to be unpredictable with light volume. And with the big guys not around during these 2 weeks, it takes big volume to move a market down. So it's very unlikely that we're going to see continued selling. Unless the US dollar really takes off to the upside and explodes, we're probably just going to see the market chop around and really kind of trade unpredictable, probably in some type of range of just kind of highs and lows, just kind of pinging around. So going back to the charts, we've seen, I'll just go back to the 60-minute chart of the US dollar index just so you can quickly see we've had a pullback this morning. That pullback this morning has helped commodities a little bit. So here's a crude oil chart. Crude oil has had a little bit of an uptick this morning. Overall, crude oil is actually starting to look a little bit more like it's trying to put in a bottom and a base. It hasn't started a base yet, but it's looking like we've kind of got these moves down, and then suddenly we're getting these new lows and bounces, and it feels as though the crude oil could be trying to form a little bit of a base here, and we're back up testing. So eventually we could see a nice surge to the upside and then some pullback, and it might rally all the way up to the 98 level, which is going to act as a key pivot zone, simply because we have some pivot highs here, pivot low, a couple lows here, which is going to act as resistance. So there's potential for this next 2 weeks going into year end. Light volume, we could see crude oil continue to work its way back up now that it's reached the more or less measured move of the 93-92 area that I had back here once we had the first initial kind of breakdown. So we could see that move back up in crude oil. Taking a look at gold, gold continues to form more or less a bear flag at this point. It has had a strong move to the downside, and it is just kind of holding its a pattern here. If the US dollar does explode to the upside, we're going to see, I think, gold continue to drop off very sharply to the downside. I've got a 1450 target on it from several weeks ago. If we do hit that level, then I think gold should be a screaming buy, and we'll be looking to get long term and also for short term bounce. Silver is much in the same boat. It has had a strong move to the downside. It's had a very long kind of bear flag rising wedge. Slowly started to break down. You can see volume starting to ramp up as sellers become more and more active, and it's forming a little bit of a bear flag here after another strong downdraft. So if we do see silver break down, there's good potential for it to drop all the way down to the 21 area. Again, I can't really see this happening over the holidays. That's a lot of movement, a lot of work for financial firms and for big players to be to wanting to shuffle and move everything that much during this time of the year. So I could see things kind of pinging around, could drift higher. Just a sideways chop for the next 2 weeks I think is going to be, it should be expected. But again, we'll keep our eyes peeled because this is what the charts are still pointing to. So just because it's holiday season doesn't mean it's not going to happen. It just usually doesn't. Looking at the SP 500 ETF, the SPY, this is just regular trading hours, and you can see here, let me just zoom in a little bit farther. We had that strong surge up in the market with these big gaps, not really allowing normal participants to get in without literally chasing the market at the open, with a huge gap to the upside, which adds risk because generally gaps get filled, and not to mention it was a huge percentage move gap up. Usually you don't want to buy the market after a 3 or 4% move. Usually you get a pullback, and the market had done that twice, really not providing anybody a good opportunity to get in unless you want to chase it and hope that it doesn't gap down the next day or just sell straight off at the open. After those two gaps, we've had the market start to become a little more choppy, started to put in an exhaustion gap here. Overall, we had a big gap up here and it dropped, and that's where we actually took our initial short position because it was a pop and drop. Usually that's a sign of a top. Anyways, the next day we had another big exhaustion gap, which means it gaps up even higher and then eventually drops and starts to work its way lower. Since then, we've been seeing the saw blade show bearish price action. Past couple days, we've seen the market more or less just trading sideways as it tries to hold up. It's trying to hold up in this gap window, and this morning we're going to see the market open somewhere at this time just near Friday's highs. But there is potential for the market to continue to move down. We have yet to really see fear step into the market. Until we see fear and panic, it's hard to pick a bottom. It's hard to see the bottom. And the fact that we're going into holiday season, if I was just to fast forward this a little bit, I have a feeling going into this week is going to be, we're going to probably trigger our stop. I would think we're probably just going to see the market kind of drift around, make new highs and lows. It's probably going to be a little volatile simply because there's going to be a lack of volume. But I don't think we're going to see any really sharp sell-offs. I think it's just going to be sideways chop going into Christmas and New Year's. But we'll see how things go. The fact that we've had these lower highs and lower lows, and the fact that late last week we really didn't get a bounce, we just got sideways chop, just goes to show that there is selling still in the market. The sellers are holding it down. They're not really allowing it to bounce. Usually, we should have seen this bounce more or less come up somewhere up into this area and then come down, but it didn't. It stalled out fairly quickly. So there is still some selling pressure, and we could still see it head lower. But we're just going to play it one day at a time and reanalyze as the market unfolds. Now looking at the SP futures, Here are the last 3 trading sessions, which you can see the volume on the bottom. And what we saw last week, on Friday we had a nice pop in the morning, almost came up and shook our stop out, but sharply reversed back to the downside, formed a bear flag, and then the market closed right about here. Since then, this bear flag played out in overnight trading last night and this morning. We saw a continued measured move to the downside, and then we hit this. We pretty much got right down to the 1200 zone, very similar as we did last week, and we've seen a very strong move back to the upside. Now we're just starting to see some volatility here, where we're starting to see some pullbacks, and we are into these previous pivot highs. So there's a good chance that this happens a lot in a downtrend. You'll see the market rally up in pre-market. When the market opens, it gets stepped on. It comes right back down. So that's kind of where we're standing, and we have our protective stops set. They're just over this previous high. They're up here. We want to give it some room because I still feel as though the market could head lower. I could adjust that later today to go just above yesterday's high. We'll see how the market opens. That's still another 2 hours away, and kind of go from there. If we lower our stops, we'll be able to squeeze out another 0.5% or so on our ETF plays. But I'll play that by ear. Anyways, that's it for this morning, and I'll talk to you in a bit. Bye bye.